So we are looking at these two concepts of liquidity, internal and external liquidity. Now, like the previous class we had, I explained the types of liquidity that we have, which is we have trendline liquidity, we have double top liquidity, double bottom liquidity, and we have structural liquidity. So today we are looking at two concepts of liquidity, which is internal and external liquidity. So when we talk of internal liquidity are those liquidity that are formed within the range of price action. Internal liquidity are formed within the range of what? Price action or price movement. External liquidity are the all-time highs or all-time lows of the market that prices are expected to take out, right? I'll quickly illustrate that so that you understand more very well. So let's say price is in an uptrend. When price is in an uptrend, we have markets forming, let's say, trendline liquidity. So this liquidity level here that is formed, this trendline liquidity we have here, remember from the types of liquidity we did, this trendline liquidity we have here is an internal liquidity level. It's an internal liquidity level, right? Then when we talk of external liquidity are those levels whereby price is anticipating to get to, like your swing high and your swing low. For instance, in this trade we have, this is a swing low here, which is the low that caused the current break of structure. So let's say there is this. So this is our BOS, break of structure. So this low here now, please pay attention, this low that caused this break of structure, that caused this high to be out, is our what? Is our external liquidity. Or this is our swing low. Swing low is the low that caused the break, right? That low that caused this break up to here, that caused this price to take out this high, this low that caused it, right? This is our swing low, and then this is our swing high before price started retracing. So when you mark your swing low and your swing high, you now have your trading range. So this line marked out now becomes your trading range. So this becomes our trading range. So this is our trading range. This is the range by which we are looking to trade, right? Which we are targeting to trade between this low and this high. So whatever we are doing is just within this range. And then this high here now is our external liquidity. This is our external liquidity, and then the low here is also our external liquidity. So let me just clone this. So the low and the high are our what? External liquidity. Then whatever thing we see price do inside this range, inside this trading range, whatever price is doing here is known as what? External liquidity. Sorry, not external, internal liquidity. Whatever price is building inside here is known as internal what? Liquidity, until price takes out this external one, which is our major focus, right? Remember, inside your trading range, you are anticipating to trade from this low to this high. That's your trading range, right? Then inside your trading range, whatever price is forming inside your trading range is known as what? Internal liquidity. Meanwhile, your trading range is your what? External liquidity. Because this is, remember, money is what moves the market, right? And for the market to be moved, money is involved, right? And when market is moving, market is looking for money to move. It cannot move without money. So where it goes is where there is money, right? So if price is in an uptrend, it's trending to the upside, and we are anticipating price to take out a certain liquidity level, because price move from liquidity to liquidity, right? So from here we see that price swept this trendline liquidity, and what happened? It started moving up. Why is it moving up? Because that's where another money is situated, right? So once it takes out this high liquidity, once it takes out this external high liquidity, what will happen? You see it will start retracing back again. Start looking for another liquidity to take. Once it grabs liquidity, the next thing you see is it will start pushing up again.
Ambassador Chief Sport, so please do well to subscribe to my channel, share to your friends, share to your community, people you know that this information is going to help their trading. Share to them, and God bless.
So external and internal liquidity is not a complicated concept, right? It's not a complicated concept. You just need to understand the liquidities that are formed within your trading range. The liquidities that are formed within your trading range are known as your what? Internal liquidity. Why the liquidities that you are anticipating price to go and take out, which is either your swing high or your swing low, is known as your what? External liquidity. I hope you understand this concept. It's not complicated at all. So whatever price is doing within your trading range is liquidity. Even if price is forming break of structure here, break of structure, break of structure, break of structure, all these things are internal liquidity. So here we can see this trend line liquidity. We have this trend line liquidity. We will always want price to come and do what? To come and clear it. So that's an external liquidity. That's an internal liquidity. Our major liquidity level is this our external high and this our external what? Low. So we know that whenever price takes out our external high, we know that price have broken structure to the what? To the upside. Whenever price takes the external low, we know that price have taken out what? Structure to the what? To the downside, right? So this concept is not complicated at all. It's not complicated at all. So let's quickly get to the chart so that I can show you the external and internal liquidity concept on the chart. All right. So this is on GBP GPY, right? So first of all, what do we do? Let's go to daily time frame. So on daily time frame, we want to spot out our what? Our swing high and swing low, right? We want to spot out our swing high and swing low. Or maybe I should use another pair. Let me not make it look so confusing. All right, so let's use this one. This is another pair. This is Euro JPY. Here GBP JPY, you can see that currently you can see how the structure is looking, just pushing up, right? So it might not really give that clear picture of what I want to explain right for now. So let's use USD JPY. So this is USD JPY, right? And this is on 4 hours time frame. So remember, as a day trader, you can use 4 hours or daily to mark your words, to know your structure, your trend, and mark your zones, right? So here we can see that price is in an uptrend, right? We can see that market is in an uptrend, right? And then here we have, this is the last break of structure. Got this break of structure, a little one here, and price got up to this level, and price is retracing, right? So when we talk of external liquidity, here we have this swing high. This is our swing high here. This is our swing high. This is our swing high. And then we have the low that caused this break of structure. This is the low that caused this break of structure here, that took out this high. This is the last high here. This is the low that took out that high, right? And price pushed all the way up here, right? So this low took out this high here, right? So this low becomes our what? External liquidity level. Please pay attention. This low and this high, both of them becomes our what? Our trading range. So from this high to this low becomes our trading what? Trading range. So that means whatever thing we are looking to do, we are anticipating to do it within this range, right? So any other thing you see price forming inside, like here we see price is forming downtrend structure, right? Price is forming downtrend structure. We have breakout structure, breakout structure, breakout structure. You can see price forming downtrend structure, right? Does this mean that this market is in a downtrend? No, this is just a correctional move, right? And any other thing you see price forming in here is known as what? Is known as internal liquidity. For instance, we have this trend line liquidity here. Watch out. We have this trend line liquidity. We have the first touch here, second touch, third touch. Even this one too is a touch. That's 4 touches, right? This is a trend line liquidity. But this liquidity is our internal liquidity. We'll be expecting price to come and take them out. Also, then take out our what? External, which is the major one. This one is the oga, right? These ones are the sons or the children. This is like the father, and this is the sons or the children, right? So this is the father, and these are the sons, right? So the sons also helps to move the market, but the father is what we are actually what looking for, right? So our major focus is always to go for what? The external liquidity levels, which are the bosses, right? So for instance, on this trade now, we know that what we want to see now is price should keep dropping until it gets here. Once it gets here, we want to see what? Start reversing to the upside, start forming something like this to the upside. And let's say we entered our buy here. Let's say we entered our buy here, for instance. Let's say we entered our buy here. Where are we going to anticipate? Is this oga here is where we'll be anticipating to take our profit. Why? Because we know that that is where price is going to be heading to. I hope you understand. We know that this is where price is heading to. After price has cleared, after price has tapped on our demand zone, we are now anticipating a reversal, right? That reversal will now clear this trend line liquidity. You see this trend line liquidity, you see these children, it will clear all of them, right? It will clear all of them and then still go for the papa. Once it clears the father, it will now start retracing back again. It will now start retracing back again, still forming little children. Before you know it will start going up again, just like that, right? So this is the concept of what? Internal and external liquidity. It's not complicated. It's not complicated at all. It's very self-explanatory, right? So you just need to understand that we have liquidity, we have internal one, and we have external ones. Whenever we are in a trade, we are anticipating to take the what? The external liquidities. You can still target the internal liquidity depending on how long you want to hold your trade. For instance, if you want to hold this trade all the way here, it can take, let's say, 3 days, 4 days, even 1 week, or even 2 weeks or more, right? But if you want to target the first child, which is this one here, you discover that it can hit your TP in a day. In a day, you can hit TP and go. Then next day, you now start looking for another entry, which you might not be able to get another entry, or sometimes you will still be able to get, right? So you just need to understand that liquidity is what determines your stop loss and your what and your take profit, right? So if you're targeting, if you enter a trade, you are targeting to take your profit at a liquidity level. You don't put your take profit at anywhere. That's why on my chart you always see me put take profit at a particular level, and I always mark it out just the way it is on the chart right now, right? Why? Because it's I'm showing you where I'm taking the trade and where I'm anticipating that trade to get to, right? So that is it. Remember, your swing low and your swing high makes your what trading range. Whatever thing that is formed inside is your what is your internal liquidity, right? So those your swing lows and your swing highs are your what external liquidity. When price take out your swing high, when price takes out the swing high, we now know that we have gotten a break of structure to the upside. If price takes it to the downside, we know that we have gotten a shift of the market to the what to the downside. We start looking for opportunity to what to continue the sell, right? So that is just the concept of um that's the concept of internal and external liquidity. I hope this is very well explained and no complication. So if you have a question, you can quickly